Hi, everybody. My name is Jeanette Acevedo, and I am a health insurance agent in the state of Florida. But I wanted to bring you something a little bit different that maybe would help you only because I've had a lot of requests for this. So I'm going to bring it out to you. The information that I'm bringing you today is about your personal credit. All right. And I'm actually going to read a lot of it from my book. I have this book actually. It'll be more like this if you're purchasing it. Get the Credit You Deserve, which will teach you about credit and all the different things related to credit. So this video might be a little bit long. It might be part 1 of 3 or just all in one. Who knows? So I'm just going to read from the book so that you have a clear understanding so that I don't babble like now. Sorry. All right, so what is credit and how is it determined? Okay, most people don't understand how their credit is established. Although it can be a simple topic, people in the field of finance seem to make it much more complicated than what it really is. Unfortunately, most schools don't teach this, and I really feel that this, credit should be a required subject for all high school and college students. I've always felt that way. And we're going to discuss the most common representation of the score, the one that everybody seems to know, which is the FICO model. Excuse me. FICO stands for Fair Isaac and Company. FICO is the company which created the software that calculates certain consumer criteria in order to determine a credit score. The score would then advise a financial institution of the potential risk of loss if they decided to extend credit to a particular consumer. All right. As I understand it, when FICO created this program, they sold it to the 3 major credit bureaus, the Experian, TransUnion, and Equifax. And then each of those bureaus then tweaked the program just a little bit so that it was aligned to their own criteria and slightly different from their competitors. Of course, they didn't want to be exactly like their competitors. Then your scores would be exactly the same, right? This is part of the reason why your 3 scores are not the same, all right? The other reason, besides that they tweak the program to adjust to their criteria, the other reason is because every company that you do business with doesn't report to every credit bureau, okay? It costs businesses money to provide a consumer's payment history to the credit bureaus, all right? It's not a free service. So one of your creditors, let's say, if one of your creditors reports to 2 out of the 3 credit bureaus, you're going to see a difference in your score based on that as well. Besides the way they tweak the model, right? So that information, along with the information that the credit company places on that information, will affect the score. Okay, so that's important for you to know in terms of when you're gauging your credit scores. Okay, one is that they don't have the same value. All the information that they collect doesn't have the same value for each credit bureau. And number 2 is your information may not be reported. Your payment history may not be reported to all 3 credit bureaus. So that'll change the score a bit, okay? So now let's look at credit score ranges, all right? So typically when I'm working with a client, I use the FICO model, but there's another model called Vantage scoring. And I've seen that used in apartment communities, and that model gives you a grade of a letter, like a A, B, C, or D, okay? So if you have A credit, A, the letter A, then your score is between 901 and 990. If you have B credit, it's between 801 and 900. If you have C credit, it's between 701 to 800. If you have D credit, it's from 601 to 700. And if you have F credit, it's from 501 to 600. I've never seen anybody with a 990 score. I have seen in the 850s, 840. I have seen scores that high, but not typically higher than that. And then again, I'm looking at the FICO model, you know. So we're only going to focus on the FICO model just because that A, B, C, D, F kind of reminds me of school, and I don't like it. All right. So according to the FICO model, your score can range between 300 to 850, okay? So now each credit bureau has a range that they'll go up to. Like, for example, TransUnion, their scores can range from 501 to 990. Experian, their scores can range from 330 to 830. Equifax can range from 280 to 850. Those are the ranges of scores, okay? And typically you want to have your score in the 700 range. You know, I try to get people in the 700s. That way they can push it along to get a higher score, but many factors determine your score, okay? So when I had my company, I used this model. I'm going to show you on the cover of this book. This was the model that I use for scores, and I'm going to tell you about that shortly here. So these are what I call the factors that determine your credit score, okay? So I was using this way before it was popular. Nobody was using this when I was using this. This was 2009, 2008, 2009, around there. So your payment history is 35% of your score, and we're going to get into each area here, okay? So payment history, 35% of your score. Amounts owed, 30% of your score. Length of credit history, 15% of your score. New credit inquiries, 10% of your score. Types of credit used, 10% of your score. Okay, so that's like the basis, the baseline of what you need to know. You need to know those values. You don't have to remember them, just jot them down or come back to this video or jot them down. All right, so now we're going to get into the meat of this, okay, and what you need to do so that you can look at your credit, figure out what is going on there, and take the steps necessary to fix it, okay? So this is credit education, all right? This isn't credit repair, although with the education, you will be able to repair your credit. I no longer provide credit repair. I do provide credit education where I do this same thing just because it's a lot of blah blah for people. It's too much, too confusing, it overwhelms them. And so people hire me to do it for them. So I give them, you know, a report based on where their credit is at and what they can do to greatly improve it, where it's at, what it means, and what they can do. So if you're interested in that, you can just contact me. My email is down there somewhere. Okay. So the first thing that you need to do, well, really the first thing should be is to educate yourself, what you're doing now, okay? So after you do that, you want to request copies of your credit reports, okay? So I'm going to read this just so that I don't forget anything for you. So if you're making a major purchase within 3 to 6 months from now, take the time to check out your individual credit report with each of the 3 credit bureaus as soon as possible, okay? You might qualify for a free copy if you haven't had one in over a year, okay? Or if you were denied credit recently, they will whoever they chose to try to qualify you for that lending product, okay, will be the one who will provide you with a free credit report. Otherwise, a credit report is about $11. The only place that's authorized to provide you with a free copy of your credit report is, and I'll put this in the bottom as well. I'm going to highlight as I go so that I know to put it down in the bottom for you. Is www.annualcreditreport.com. I'm going to say that again, www.annualcreditreport.com. No other place can give you a copy of your credit report for free, okay? Now, when you go there, you download it. So it'll be a download. So make sure that you save it to your computer so that you have all of the information. Now, the good and the bad part about this, okay? The good part about getting your annual credit report like that is you get it instantly if they can verify who you are, all right? If they can verify your name, your address, your social, all that jazz, you can get it immediately. The bad part is that there's a lot of pages of blah, blah on there. There's a lot of confusing information on there. So I don't get my credit reports or any of my clients' credit reports that way. Okay, and we're going to step back to that in a moment. And then I suggest that if you are looking at your credit, that you get all 4 credit reports. Okay, so the first 3 you already know, it's Experian, Equifax, TransUnion. Okay, the fourth one, this one might be new to you. It's called ChexSystems, CHEX Systems with an S at the end. And ChexSystems is for the purpose of making sure that you are not barred from banking products, okay? So somebody who can't open a bank account usually is because they're barred from opening a bank account because they owe another bank money. And so they won't let you open the account. So when you go and you try to open the account, they don't even tell you why. They're like, yeah, no, we can't open an account for you. And you're like, well, what happened? They're like, well, we don't know. You know, they don't really give you much information at the bank floor. So if that's your situation, go to ChexSystems and I'll give you the information about that here shortly and get your credit report from ChexSystems, okay? Now, um, let's get back to your credit report, okay? So you can get your credit report by downloading it from www.annualcreditreport.com. They probably have a way that you can complete a form there and they'll mail it to you. I prefer the mail version, okay? So when I have clients, there's a form that I use and I mail it into the credit bureau in the name of my client. And then my client then receives these beautiful credit reports, okay? They're tight, they're beautiful. All right, the other way that you can get your credit report is you can call Experian. These are the numbers that I got through Google, so check, try the number. If it works, great. If not, Google the number, all right? So for Experian, it's 1-888-397-3742. That's an automated system where you can request your credit report, okay? All of these, I believe, are automated. For Equifax, it's 1-888-548-7878. For TransUnion, it's 1-800-916-8880. For ChexSystems, which I want for you to get that just so you can see it, ChexSystems is 1-800-428-9623. I will put all those numbers down there in the description of this video, okay? So let me highlight it so I know to put it down there for you so I don't forget. I don't want to forget. All right, so now you can always mail a letter to the credit bureaus. If you're going to mail it, and I'll put that information down there as well, the mailing address where you just send them a letter and you say, hi, like if it was me, hi, my name is Jeanette Acevedo, my social security is blah, 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 my date of birth is blah, 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 my current address is blah, blah, blah. If you have not lived in your current address 2 years or more, then you have to put your previous address and your previous, if it doesn't total 2 years, attach a copy, a clear copy, legible copy of your driver's license, your social security card, and a current utility bill, okay, to prove your address. So that letter with those documentations, and you mail it to these places. For Experian, it's P.O. Box 4500, Allen, Texas 75013. For Equifax, it's P.O. Box 740256, Atlanta, Georgia 30374. For TransUnion, it's P.O. Box 2000, Chester, Pennsylvania 19016. Now, These are correct address as of today's date, which is January 24th, 2022. I got these off of Google. However, feel free to Google it to make sure that it's the correct address, okay? And here we go, ChexSystems. I'm sorry to say, I forgot that one. ChexSystems, and it's Chex, CHEX Systems. It would be Attention Consumer Relations, 7805 Hudson Road, Suite 100, Woodbury, Minnesota. MN is Minnesota, 55125. Okay, so you're gonna make sure to copy everything that you mail out to these people. Okay, you're gonna mark your calendar. Let's say you mailed it today. Mark your calendar out 2 weeks or maximum 30 days from today. So if you're mailing it today is January 24th, 2022, you'll mark your calendar February 24th, 2022, because if you haven't received it, you need to send a second letter. Most people receive it within 2 weeks. Some people it takes 30 days. Sometimes you get 2 out of 3 of your credit reports. So if you have everything, copies of everything, you know who you didn't receive, okay? So if you decide to download your credit report from each of the credit bureaus, you will go to www.experian.com. You spell Experian Experian.com. If you're going to Equifax, it's www.equifax.com. You spell Equifax EQUIFAX.com. If you're going to TransUnion, www.transunion.com. TransUnion is TransUnion.com. If you're going to ChexSystems, it's www.chexsystems.com. ChexSystems is ChexSystems.com. Okay, so now you have multiple ways that you can get your credit report. You can't tell me, oh, Jeanette, I don't know how to get my credit report. I just gave you several ways, okay? Use the one that works for you, all right? Let me get a sip of my coffee because I'm talking, so get a sip of your coffee or your drink. Yeah. That's good. Okay, so now you've mailed out your letters to the credit bureau. You've waited patiently, la la la. It comes in the mail, okay? So open all of your mail because the envelopes are not descriptive of who they're from, okay? It might look like junk mail to you. It might look like a bill collector and you're like, yeah, I'm not opening this. I'm throwing it away. Open all of your mail because you need to see that credit report. That credit report is super important for you, okay? So now you got your credit report. Now you're going to review them. Don't get scared. This is the part that terrifies most people. And this is why people hire me to do it, is because, first of all, trying to get their credit report for them is just too much work. Then once they get the credit report, if they've gotten the credit report, they look at it as so many pages with tiny print and they just don't know how to read it, what it all means. What should they do? It just is, it's scary. It really is scary, and I get it. So I'm here for you because I'm not scared by any of that. I actually enjoy it. Okay. So now you're going to review your credit reports and you're going to create a spreadsheet where you can see everything. Okay. Now I do my spreadsheets on Excel. You can do your spreadsheet however you want to do it. Okay. You could turn on a sheet of paper and a notebook, you know, if you want to. The beauty of doing it on Excel, and for those of you that don't know, Excel is a program that probably your laptop has. Maybe it came with it. And it's where you can like list everything and add numbers and do all kinds of fun things. And that program, Excel, is excellent for this, okay? But you choose the method that works for you. If it's writing it down, do that. Do what works for you, okay? So here's your spreadsheet should have these column headings, okay? So the top of the column, because you're going to list information from each of the credit report in here, okay? So top of column, one of them is the name of the creditor currently reporting the information. We want to know who's the current person reporting the information. Who's reporting what? Then you're going to put the original debt name. That's a column heading. Column heading, balance due. Column heading, each credit bureau. So you're going to put a column heading for TransUnion, a column heading for Experian, a column heading for Equifax, okay? Not ChexSystems. You can put ChexSystems on there, but not many times will you find something on ChexSystems that's on your credit report. Rarely it does happen. Oh, okay? Rarely it does happen, but you want each credit bureau because you want to see, let's say if you had an account with Capital One, is it being reported on all three credit bureaus? Let's say you have an account with Fingerhut, is it reporting on all three credit bureaus or is it just reporting on one, TransUnion? Okay, that way you can see who has what, all right? You want to look at the fall off date. So on some credit reports, it will show you, it'll have a little statement that says this item is expected to remain on the credit report until July 2023, for example. So that's the fall off date, all right? You want to make a note of that. You want any comments, you want to add any comments that you feel are necessary. And comments would be like, if an account is, if you see a statement where it says account disputed by consumer, you want to put that comment down, that that account is being disputed by consumer, and that means that you were disputing that account with the company. If the account is, if you're a cosigner, you want to put their cosigner. If you are an authorized user, you want to put that you are an authorized user, okay? So an authorized user means that you have the account, but you're not responsible for the bill. So sometimes people become authorized users because, let's say I was married, okay, and my husband needed to boost his credit. I would make him an authorized user on my credit cards, and then that history of my good credit would then be attached to his credit, okay? Now, this works really well for people that are married with the same last name. For it used to work better than what it does now. It may or may not work if you put anyone, a random person, as an authorized user. But be careful with that because that means that they can use the card, but they're not responsible for the bill. All right. So on these headings, let's go back to your spreadsheet and the headings. It's the total debt amount will be a heading, and the credit report date. So you want to know the date of that credit report, okay? So that you may want to put in the comments, okay? So let me read those headings again, okay? Because I got sidetracked there. Name of creditor currently reporting the information. So you could just put name of creditor up there. Original debt name, balance due, each credit bureau. So each credit bureau name, fall off date, comments, total debt amount, credit report dates, okay? So, and I like the credit report dates. I put it in a little comment only because that reminds me that next year at the same time, I can request my credit report again, okay? Now, sidebar to those credit reports, you will see your credit reports, you will not see scores. You will have to pay for your scores. I say at the moment, we're going to look at your scores in another way, but we'll talk about that in a minute, okay? So now you're going to take your time with this, okay? Because it's a lot of information. I want for you to be patient and go through each report to document all of this information that I asked you to document, okay? If it takes you a week, 2 weeks, it's okay. Don't let it take you a long, long time because credit reports age out quickly, okay? They age out within 30 days because in 30 days, new information, I mean, things could be reported onto your credit the next day, really, like today. So your credit report can change from day to day, from hours in a day. I've seen a report change, but you want to make sure that when you're doing that snapshot of your credit, that spreadsheet, that you are really looking at it and you're doing it soon, okay? Soon after you receive those credit reports, okay? So once you have everything on there, that's going to be a huge time saver for you. You're going to be like, okay, now I can see everything. And now we can start to try to determine, which is step 3, determine what you need to address on those credit reports and what you don't need to address, okay? So step 3 sometimes trips people up as well because it's so much information, okay? And during this step, you may discover or decide that filing for a bankruptcy is the best option for you, and we will discuss that, okay, as well, all right? So, of course, you know, if you found this overwhelming, you can hire me for this very purpose where I would request your credit reports, which you would receive. You would get those to me, and then I would do all of this other stuff for you. I would provide it to you in an email, and we would have a telephone conversation or Zoom. If you want Zoom, we could do Zoom. I'll figure out Zoom. We can have a conversation about the good, the bad, the ugly, and I make suggestions, recommendations to you. The final decision is yours. I make no decision. I do not do debt settlement anymore. I do not do credit repair. I tell you what to do. This will be the roadmap clarity of what you need to do and the why, okay? Because a lot of times that's the stuff that people, they just don't know. It's overwhelming to them, okay? So if you're interested in that, just send me an email, okay? So I told you about ChexSystems, so we're going to skip that page. There I'm just talking about ChexSystems, okay? So, and then here I have in the book, I have insider's tips about what you can do, which we talked about. This particular insider tip is to make that spreadsheet, all right? So let's move on to the factors that determine your credit report, because this ties into that spreadsheet you just did, all right? So here we go. The first thing that I talked about with factors was that your payment history is 35% of your score, okay? So the only thing that's required from you in order to improve that part of your score is to pay your bills on time, all right? So let me give you an insider's tip, and I'm going to read this just so that I don't miss things for you. I don't want to miss anything, okay? So let's say you have more bills than money in a month, okay? And you're like, oh my goodness, how am I gonna make this fly? Okay. So let's say it's your car payment and your electric bill are due at the same time, but you don't have enough money for both. All right. So I would suggest to you that you pay your car payment on time because they are going to report to the credit bureaus, okay? Then call your electric company and ask them for an extension on your due date for your electric bill, okay? And the reason I say this is because the electric company, they don't report your late payment to the credit bureaus. They just don't, okay? They understand that life happens, and sometimes you just need a little extension on your time to pay. But don't forget to pay that bill, that electric bill, when you said you were going to pay it, okay? So if you pay your car payment late and they report that late payment, your credit is going to take a dip of like 50 points, sometimes more, okay? So that's not true for everybody, okay? Because those people that have a good score, and I mean 700 or more, if they have an isolated late payment, sometimes it doesn't affect their score. However, don't risk it, pay that car bill, pay that car note on time, before the due date, actually, before the due date, because you don't want to take a hit on your credit, okay? So when you're doing your budget, And I'll do another video on budgets to help those people that need help with budgets. That's something else that I do with people. But when you do your budget, make sure that your money and your bills are aligned, okay? And then pay those bills that report. If you're short on cash, pay the bills that report first and call the bills that don't report, your cable bill, your water bill, your electric bill. Call them and ask for an extension and then pay it when you say you're going to pay it, all right? So now here's the second part of one of the factors that determine your score. It's the amounts owed portion of your score, and that's approximately 30% of your score, okay? So there's a lot of detail with this here, okay? So you may want to take notes or remember the time on this video so you could come back to this if you need additional help. You can watch this as many times as you want. Anyway, it doesn't matter. So the first thing with that is you want to keep your balances within the range of 10% to 30% of your available line of credit, okay? 10% being the lowest balance and 30% being the highest balance, okay? And I'm going to give you details on that, all right? So while you're improving your credit score, remain consistent in that area. Of course, if you exceed that 30% by a bit, it may not be a big deal. However, you don't want to max out your credit cards or go over the available line of credit. Those two actions on your part will lower your score, okay? Now, there are consumers who can't carry a balance in the 30% range. They actually have to carry lower balances in order to positively affect their credit score, all right? It just depends on the total amount of available credit that a person has in comparison to how much debt they carry, so that debt load. So here's what I would recommend, all right? And this is going to help you in two areas. I recommend that you monitor your credit score by using creditkarma.com. So it's www.creditkarma.com. That's a free site. I don't get any promotion or anything for telling you to go there. This is what I use for myself and for my clients, okay? And that's why I like it. It's free, it's easy. It sends you alerts of different things, which is good, and you can kind of see, you can monitor where your score is at and how you're improving, which is good, okay? So let's go back and look at those credit cards, all right? So let's say you have a credit card with an available line of credit for $1,000. Let's say it's a Capital One card, okay? I want for you to pretend that your line of credit on this card, instead of being 1,000, is actually like 300, okay? You want to pretend that's like your pretend 300 credit limit amount, because that's about 30% of that line of credit. So you have 1,000, it's actually $333.33, but say 300. It's an easy number to remember. Try not to go over $300 in terms of credit used on that $1,000 credit card, okay? And if you have to go over the $300, try not to go over 50%, which would be, in that case, if the card was $1,000, it will be $500, okay? So what happens is that you are proving to the credit bureaus and to that credit card company that you're responsible with other people's money, okay? So you want to make sure that you use your credit cards. You want to use them because if you don't use them, they will close them for inactivity and then you lose that part of your credit. So you want to use your cards, but you want to carry balances between 10 and 30%. I want to say it's 24 months of inactivity on a card where the credit card company will shut it down, okay? They'll close it for you, all right? So now let's say you have a minimum payment, you know, of $45. And you're like, oh, well, I only owe $45. I'm just going to leave that there. But they send you a bill and they say, you know what? You have to pay. Your minimum payment is $45. Pay it, okay? You do not want to have a late payment at any point in time with any of your credit cards. if the minimum payment, if you actually see that they tell you the minimum payment is 0, maybe at least pay 25 bucks anyway on there or something if you have a balance, okay? But you don't want to ever miss a payment. You want to consistently try not to have a balance over 30% of your available line of credit and not lower than 10% of your available line of credit. By doing that and you're monitoring it on Credit Karma, you're going to see, like, if you max out your card, how your score dips. And then when you start paying it off, how your score increases, okay? Because the score is fluid. It's a fluid number. It changes all the time, okay? But those two right there are really good things that work for your credit, okay? So paying your bills on time, the bills that are being reported, obviously, the ones that are not being reported, if you need time to pay because you don't have the money on the due date, call them and say, hey, can you give me an extension? They will. So number one is paying your bills on time, and number two is keeping those balances within a certain range. The range is 10% to 30% of your available line of credit, okay? So now let's see what else. Let's see what else is on here for you. Next thing that I want to talk about here when it comes to those balances is collection accounts, okay? Because those collection accounts are actually affecting your credit because they're collection accounts, okay? So some credit repair companies advise their clients not to address or re-age accounts that are in collections, okay? Now, when it comes to collections, I look at it a little bit differently, okay? So I'm going to give you this information because you might be able to use it, all right? So first, when you see those collection accounts and you'll see them on your spreadsheet that you did, you want to determine whether the collection account is accurate. Maybe there's a collection account there and you're like, maybe it's like, you know, like I live in Florida and let's say it says that I have an emergency room visit in Minnesota. I'll be like, I've never been to Minnesota. That's inaccurate because I've never been to Minnesota. So how could I have been in the emergency room in Minnesota? So then you dispute it. You say, hey, that's not me. I've never been there. Please remove this from my credit. And they will. The next thing you want to do is, depending on your state, okay, you want to check to see what's the statute of limitations. Okay, and there is a site online, Google somewhere, where you can check the statute of limitations for your state. Okay, so the statute of limitations is tied to the date of the last activity on the account, and I'm going to explain that a little bit better. Okay, so let's say you have an account. You had an account. We're going to use Capital One again. Okay, lots of people have Capital One. You had a Capital One account. Okay, and you just stopped paying it because you lost your job or you got sick or whatever. You just stopped paying it, and this happened in like 2018. You stopped paying for it. May 2018, okay? And you're in a state where the statute of limitations is 5 years. So you stopped paying it May 2018. You didn't make a payment. It went into collections. It's sitting on your credit. The statute of limitations is 5 years, right? So May 2018, 2018, 2019, 2020, 2021, 2022, 2023. May 2023 is when the statute of limitations expires on that date based on your state and the date of last activity, okay? The first time that it was 30 days late. So you count from your last payment that you actually made from that next month, all right? So for 5 years, Capital One can sue you for that debt. They can garnish your salary. They can sue you. They can place a lien, judgments that are 5 years, okay? After May 2023, it'll hang out on your credit for 2 additional years, so 7 years. Now, I want to say the only state that has a 10-year statute of limitations is Indiana. So I'm sorry if you have any debt in Indiana because Indiana does not play, all right? Just saying. But a lot of the other states, you know, they just don't have the time to be monitoring this. So they take it as a loss, they write it off on their books. That's a story for another time. Okay, so you want to look to see whether the account is accurate, that collection account that's on your account is accurate, what's the statute of limitations, when it expires, how much time you have, you know, do you have any time? Did the statute of limitation expire and therefore they can't do anything for you? Well, then let it sit there, okay? Um, if it hasn't expired, then look out for mail, you know, don't address them unless you absolutely can financially, all right? So that's my take on that, all right? So if the statute of limitations has expired, you want to think about your goal, okay? So if you want to qualify for a mortgage in the short term future, I would suggest that you look at that debt, you call your mortgage broker, who's ever doing your mortgage, and ask them if you need to address that debt. Sometimes lowering a little bit of debt will help your score increase so that you can qualify, but your mortgage broker, your lender will know the underwriting guidelines. So ask them, okay? Um, the other thing too is if you just want to know what's going on with your credit and your goal is to fix it and you know it's going to take you a couple of years and that statute of limitations is coming due or it's past, just let it sit there and let it fall off, okay? Because if you don't have the money, you don't have the money, okay? Now, if you need to address the debt and you have the money to address it and you want to settle on the debt, um, you may have to address the issue. I always tell people if they are addressing debt that they're going to settle, you want to do that at the end of the month. You don't want to give them any additional information. If anything, you want to have a sob story in addressing the settlements, if anything, okay? But you want to do it the end of the month because typically at the end of the month, those people that are collecting on those accounts need to meet a quota, so they might be able to give you a better deal. You might want to hire somebody who is an expert at settling debt for you. That's not something I do anymore. I've done some great works with settling debt because I was impartial. You know, it didn't mean anything to me. Um, the collector on the other end wasn't scaring me. I was like, where are you at? I'll go and visit you and we'll settle this face to face. You know, my client has this much to pay and we can either do this or not, you know. So it depends on your style. Everybody's different. You choose what you want to do. I do not do debt settlement anymore, okay? So um, you want to, if you decide that you're going to settle on a debt, you want to check with your, it's the Attorney General's office, or it's either that or the Office of Financial Regulations to make sure that that collection company is licensed in your state. Because if they are not licensed in your state, they're not authorized to collect on debt in your state. And that happens a lot where you have a collection company calling you, they're blowing up your phone, they're trying to collect, and finally you pay them. And you know what? They weren't even licensed in your state. And then you find that the debt is still on your credit. It was never settled. They were like bogus and you're out of your money. So be very careful because debt can be tricky, okay? So another tip that you can do is if you're going to settle on a debt, and let's say, again, we're going to use Capital One. It was with Capital One. Call Capital One directly. Let Capital One tell you, yes, you could settle it with us, or no, we've referred that out to this company and they're handling that debt for us, okay? And still check to see that that company is licensed in your state, all right? So settlement is tricky. Um, some people can do it on their own. There's a lot of nuances to debt settlement, okay? So I would recommend that you hire somebody to do that. But again, I do not do debt settlement anymore. All right, so you can find debt validations. You want to validate debt. There's a series of things you want to do. You know, you want to make sure the debt is yours. You want to make sure the statute of limitations. You want to make sure that the collection company is licensed to collect in your state. Then you want to validate the debt. Sometimes they don't validate. If they don't validate within 30 days, the credit bureau is required to remove it. However, please know that the credit bureau is on the side of the collection company. They're not on your side, okay? They're on the side of the collection company. So they know that companies can't always validate a debt in 30 days. So if that company validates in 90 days, they will reinsert that accurate and verifiable, sometimes not accurate, not verifiable debt collection back into your credit report. So you got to keep a watchful eye with that, okay? So that's my tip on that, okay? Because so many things can happen with debt settlement, and there's information in the book detailed, but I would recommend that you consider this very carefully. Maybe speak to an expert in debt settlement. All right. So let's see. Let's see what else we have here. This is all. I have information in the book about collections account, collections account. We're going to skip all of that. You'd have to get the book if you want all that detail. Because, you know, we've been at this like almost an hour now. So let's talk about length of credit history, okay? So length of credit history is, I want to say it's 15, yeah, it's 15% of your score, okay? So what does it mean? The best way that I can describe this is, let's say you're 40 years old now, okay? And you applied for a store credit card when you were 18 years old, okay? You still have the card, let's say it's to, we're going to say Victoria's Secret, okay? If you're guys, maybe you got it for your girlfriend, I don't know, or your wife. You still have the card, you still use it on occasion. That card has a credit history of 22 years, okay? So that's super awesome, all right? And let's say this same card has a perfect payment history, okay? And you've never gone over the line of credit, you know, you've never used more than 50% of your available line of credit, okay? So that is a beautiful card. Now, let's say you decide, you know what? I don't want this card anymore. I'm not going to buy Victoria's Secret anymore. That's it. I'm done. I'm going to just close this card. Well, you call them and you close the card. Your credit will take a hit. It will drop about 30 points, okay? So that long history that you have with that card, that people can look and see, oh my goodness, what a great history, a long history, no lates for so many years. Always keeps a balance in line. This is beautiful. That's really boosting your credit. And when you close it, you lost it. After you close it, you can't even pick up the phone and call that company and say, oops, I made a mistake. They're going to be like, yeah, no, apply for another card. You're done with that. So make sure that you keep those cards that have a long and good credit history. You keep them, you use them, you maintain your balances, you pay on time, all of that. Some people also close cards because the card was at no annual fee. You know, it was like no, like every year, like a renewal fee almost. So all of a sudden now they're saying, okay, well now we're charging all of our customers $29.99 annually to have this card. And you're like, yeah, no, I'm not paying that. So close my card. Well, now because you didn't pay $30, you lost 30 points on your credit. So think about that. You may just want to pay the $30 and just, you know, just to keep that card, okay? So there's a lot of things when it comes to length of credit history that you should consider, all right? So now let's talk about new credit inquiries. New credit inquiries are 10% of your score, okay? So if you're working on improving your credit score, you want to make sure that nobody is pulling your credit to see if you qualify for anything. Now's not the time to be applying for stuff, okay? When you look at your credit, it does not affect your credit because that's your credit. You can look at it as many times as you want and it will not affect your credit, okay? But don't apply for credit during this time. It's very important you don't apply for credit. And then if you have like no credit, we're going to talk about that in a little bit. But just know that while you're trying to build your credit, don't have credit inquiries, okay? A lot of times people see their credit improve and they immediately go out and buy a truck or buy stuff, furniture. Don't if you're trying to improve your credit. Excuse me on that little cough, okay? So the last thing when it comes to determining your credit is the types of credit used. This system is looking for different kinds of debt. It's looking for installment debt and revolving debt, okay? So installment debt is debt that has a beginning and an end date. So for example, that car note that you have has a beginning date when you started the loan and it has an end date when you end the loan. So when you apply for the credit, your score dropped a little bit because you applied for credit, okay? Once you made that first payment on that truck or that car, your score improved. And then it continued to improve because you were making on-time payments, every month until the 5 years, the last payment is due. You're like, oh, thank God, I don't have to pay this $400 car payment, okay? So once you pay that $400 car payment on the car, and now that installment debt has a beginning and an end date, it ended, your score drops, okay? That is an installment loan, okay? Revolving debt is your credit card. That means that amount could be high, it could be low, it revolves, it continues, that account continues for as long as you are making your payments on time, you're doing everything right, that that line will continue. So when the system, the FICO system, is determining your score, it's looking at the types of credit you use. Okay, so it gives more value to some credit than others. Um, for example, it may give a little bit more value to a mortgage than your rent because your rent doesn't show on there. Okay, it might give more value if you have a good mix of, if you have like three revolving debts and maybe one or two installment debts. It'll be like, oh, okay, this is a good mix of credit for this person based on their income, based on the available lines of credit, payment history, the debt load that they're carrying. It's a good mix, and so all of that really helps your score. I mean, it's only 10%, but 10% can be a huge amount. Okay, so that's all of the information related to your credit. That's as much as we can share in this video. Let's move over to building credit. Let's say you're like, well, Jeanette, I don't have any credit. How am I gonna build my credit? Well, you can use your own money to build credit, okay? So when I work with clients and I look at their credit and I'm like, you have no credit history. So there's certain things that they want to do to create credit, okay? So one of the things that they can do is they can become an authorized user in their spouse's credit, their parents' credit. Sometimes a really good friend will let you become an authorized user. And with an authorized user means that they put your name on that line of credit. Sometimes they don't even give you a card or anything, they don't give you anything. They're like, I'll just put your name on there. You don't get anything. And you shouldn't because it's not your card. You didn't really qualify for it. They did, but they're helping you by lending you or letting their positive credit overlap onto your credit so that now it appears that you have a line of credit and that will boost your credit, okay? So anything that they do on that card that's theirs will affect your credit. Okay, so that's one way. Another way to build positive credit is to use your own cash money. Okay, this sounds a little bit tricky and funky, but it actually works. Okay, so what you would do is you would go to your local credit union. All right, and at your local credit union, you would ask them if they have any lending products to build credit. Now, you do not want a secure credit card. You don't want a secure credit card. I don't want you to get that. I want for you to get, it's a CD product, certificate of deposit product. It's kind of like that, where what happens is you go to the bank and you open an account and you put $500 in the bank. Okay? And what they do is they lend back to you your same $500. Okay, so the money that they lend to you, the $500, is being secured by the money that you put in. So you put in $500, they lend you $500, and then you have a monthly payment on that $500 at a low interest rate you have to pay. So you will be paying a little bit of interest on that. And I recommend that people do that kind of an account for 1 year, okay? The moment you make one payment, your first payment on that loan that's secured by your own cash money in an account, your score is going to boost like 30 points, okay? Which is huge. Some people, I have known them to do this same account in 3 different banks because they needed to boost their account, their score greatly. So they opened one at this credit union, one at another credit union, one at another credit union. They actually used the same $500. They put $500 here. That bank lent them the $500. They took that same 500. They went to the second bank. They put it in. That bank lent it to them. They took that same $500, went to the third bank, put it in. They lent it back to them. And then with that $500, they would just pay every month to these. Now, it will be more than 500 per because remember there's interest charges, okay? So make sure you're keeping an eagle eye on that because you don't want to miss a payment, all right? I did that myself and it was amazing. I did it just on one bank, one credit union, and my score went up 30 points. And what I did was I took the $500. Oh no, I took my $500, I put it in the bank. They were like, okay, here's the $500. And I was like, no, 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 just leave it there. And I put another 100 and I did automatic payments. And I was like, just let that pay itself. And it did. It paid itself. It would just come out of that same account. I didn't have to think about it. I had that automatic payment. I didn't have to think about it. But I know that if I need to boost my credit, I could do that. And for those people, this is especially true for those of you who are trying to buy a house and your credit is just almost there, but not quite. Do that. Do that in 30 days, 30, 45 days, 60 days tops. Your score will boost with that. And that's an installment loan because it has a beginning and an end date. You want it to last 1 year. And I would recommend if it was me, do what I did, where you put the money in there, you put another 100 and you set it up so just automatic payments from that account and you don't have to worry about it, okay? So that is a great way to build your credit, all right? So now let's talk about tax liens, okay? Oh, just backtracking on that, sometimes you can't get that bank product because you might have a tax lien, a student loan that's in collections, or child support. Okay, it's not always a ChexSystems thing. Sometimes it's because your credit. All right, but let's talk about tax liens really quickly. So if you have a tax lien and you're like, oh my God, I have a tax lien, I'm never going to be able to get out of this. There's a program with the IRS. It's called the Fresh Start Program. Now, I'm not a CPA or an accountant or legal advisor, okay? I just know that there is a program with the IRS called the Fresh Start Program, and it's where you can have a tax lien removed from your credit when you arrange automatic payment plan with the IRS. After 6 months of on-time payments, the IRS, you can put a request into the IRS that they will remove the lien. They have the right to remove it or not. They either will or they won't. But if they remove it, it's great because then in terms of a mortgage, if you provide your mortgage lender proof that you are in a payment plan with the IRS for this tax lien, you can more than likely qualify for a mortgage. So in the case of tax liens, I would recommend tax liens and you're trying to get a mortgage, speak to your mortgage person to make sure that is true. Then find an attorney in your area that specializes in this. Sometimes they can do either the Fresh Start program where you do a payment plan, or if you have like some money, maybe you can do, even the IRS will settle on debt. They'll do a settle for less than on debt. It is a process. That is a process that may take a couple of years, but depending on your situation, speak to a tax advisor. They are your friends when it comes to tax liens, okay? So now let's go to student loans, okay? So student loans, having student loans in default is another thing that may disqualify you for lending products, okay? So you can do some things to help you in that area with that student loan, okay? So you can either do a deferment with the student loan, okay, for a certain period of time where you defer those loans, okay? Um, you can do, besides a deferment, there was a company that I used to use to do like a consolidation of the student loan. So you can consolidate your student loan debt into one. I'm trying to think of the name. If I think of the name, I'll put it in the comments. There was a company that I used to use with my clients who had huge amount of student loan debts, and we would roll it all together and consolidate the student loan, and then that would give them a lower payment. Um, there's like a deferment because of something, and then there's a economic hardship deferment, which is another thing. Um, if it's a parent plus loan, um, I never recommend to parents to co-sign on student loans for their children, because if you do a parent plus loan, that's on you. I have seen some of my clients have to take out money from their annuity just to pay off their adult child's student loan, because the adult child, after spending like $100,000 in student loan, that was their parents' money. They didn't even get a job. They didn't even graduate. They didn't do anything. And so the parent was left on the hook. So sorry to say, I do not recommend co-signing, parent plus loans, nothing like that. Okay. So now as I look in my book that I wrote here, I have a lot of tips on here, which I'm not going to go through those tips. If you want to look at those tips, I have things like debt to income ratio, things about underwriting guidelines. I do want to talk about bankruptcy though, okay? So again, I'm not an attorney, okay? I'm not an attorney. I would recommend that you consult with a bankruptcy attorney. They typically will provide you with a free consultation, okay? So sometimes I have worked with clients where my recommendation was a bankruptcy. I put it on the table as a suggestion, because sometimes people have so much debt that there's no way in the reasonable near future, within the next 3 to 5 years, they can get out from under this debt. It's like suffocating them, it's killing them, and it's like it's not worth it. In one case, I saw a young lady as a client. She came to see me um, because she was a very young lady too, lovely girl, and she had gotten sick, and she didn't have health insurance. And so, of course, when she went to the doctor, and all, it turns out that she had the C word. I'm not going to say the word, the C word. Okay, she had that, and so she got better. She got better. She got the care she needed. She got better. But then, a year, 2 years later, she's looking at her credit. She couldn't even get an apartment. She couldn't get a car. She couldn't do anything, you know, because she had this huge amount of debt. It was over $1 million of medical debt. And I saw this beautiful girl, and I was like, oh Lord, I'm going to make a recommendation. I said to her, bankruptcy. Say, you know what? You didn't cause this death. This is something that happened to you. You got sick. Life happened to you. You got sick. You didn't have insurance. You went to the doctor. We live in the United States. They're going to take care of you. But that bill's going to hit your credit. Okay? I told her, listen, go and see a bankruptcy attorney. File for bankruptcy. You're going to have a clean slate. And then this is what I want for you to do once that's done. So I recommended she do the bankruptcy, clear the slate, and build credit using her own cash money. She went off with my advice, and she said, I didn't know what to do, but thank you, I'm going to do that. I imagine she did that. I imagine she's well, healthy, having a wonderful life out there, doing her thing, because sometimes bankruptcy is the only recourse. There's so much debt, it's overwhelming, it's stressing you out, you're going crazy. Go and see a bankruptcy attorney. I am not a bankruptcy attorney. I'm not, okay? However, I would recommend that you see a bankruptcy attorney. Even a bankruptcy attorney will look to see what your debt load is based on your income. But if you want to look at your credit, if you want to determine, hey, is my credit good, bad, ugly, indifferent? What can I do about what's going on? Doing this spreadsheet, Jeanette, is too crazy for me. I can't do it. I am happy to help you. I do charge $300 for this service because it takes a lot of my time, and I teach you everything that you need to know. Um, I do not do debt settlement. I just make it clear for you, tell you what your next logical step should be or steps. That way you can move forward and repair your credit doing the right things, because you need to know what are the right things. People don't know what the right things are to do. Okay. So anyway, I am going to end here. We've been together a little bit over an hour. If you've watched this whole video, thank you so much. I will put a lot of comments down there of information that will be useful to you, things that we talked about in this video. My name is Jeanette Acevedo. You can find me at JeanetteAcevedo.com. You can email me. My email is down there, but it's Jeanette, the insurance lady, at gmail.com. I am an insurance agent in the state of Florida. So if you need health, dental, marketplace, if you're a high income earner, and you can't find the right plan because marketplace is just not the deal for you, I have some great plans for high income earners. I also do final expense for those people. A lot of grandmas and grandpas call me for that because they want their kids not to be struggling to have to pay for their final expenses. So I do a whole bunch of things like that. Besides doing this kind of credit, I also do business and life coaching. Um, so feel free to contact me down there. My name is Jeanette. I hope you have a wonderful day today, and thank you for hanging out with me. Take care. Bye.